So in this video, I wanted to go through and show you how to invest £100 or even as little as £1 or less. So the first thing you'll need is a broker, basically someone who handles the transactions so you can purchase stocks through a stock exchange such as the London Stock Exchange or New York Stock Exchange, NASDAQ or so on. So in this video, I'm using Trading 212. Freetrade is another alternative broker. They don't charge any sort of commission. It's completely free to trade. And if you sign up to both, you can get a free share from each. So Trading 212, you can get one up to £100. And Freetrade, you can get one up to £200. So I'll leave the link in the description. Use that if you're new to the platform, and we both get a freebie. So depending on yourself and your personal preferences, how you invest your first £100 or however much you want to deposit will differ obviously on your investment goals and your mindset. So if you're planning for the long term, you're going to continue investing, depositing into whatever you invest in. I believe it's best to either create yourself a diversified portfolio, or you can equally buy a ready-made portfolio through an ETF. So on Trading 212, you can go into the search option, click on ETF, and you can buy any of these funds that basically have multiple stocks and shares within inside them. So you buy one unit of this Vanguard FTSE 100 and you automatically buy 100 different stocks and companies within the FTSE 100 in this ETF. So Trading 212 is good for this, particularly if you are going to buy your own or create your own portfolio, because they offer fractional shares. So if I go into this here, settings here, trading preferences, so I can show which shares offer fractional shares. So basically this means you can buy, well, as it says, a fraction of a share. So you can see in 3M here, I have 0.328 blah, blah, blah of a share. And that means I don't have to buy one share for $154. I can buy as little as £1. So in some companies, you can buy even less of this. So I don't have £1 in my account to buy, but you can go down to like crazy small amounts. So I can buy 10p worth of shares. So if you are investing with £100, 50, 20, you can create a diversified portfolio and spread it across loads of different companies without worrying about having to buy a whole share and spending a lot more money than you would have done otherwise. So on the other hand, if you're not looking to continue to invest, and you can still be in it for the long term, but if you don't think you're going to have more money coming in or spare money to invest, if it's a one-off investment, you may want to take more risk, because if you're unable to keep topping up every so often, it will reduce the effectiveness of the compounding, which I'll talk about in another video. So I'll link that in the description. I'm putting an annotation somewhere on the screen. So taking more risks can involve investing your whole deposit in just one company that has seen a lot of growth or has a lot of growth potential. So in recent months, a good example is Tesla. So I can open up Tesla here if we go on most popular. So Tesla, you can see in recent months it's absolutely rocketed. So in the last 3 months, it's got about 148%. The year it's made 500% in 1 year. So if you invested your £100 within a space of 12 months, you would have got 5-fold your money back, which is the average return for the stock market is 7%. So in 1 year to receive 500% is almost completely unheard of. But obviously, this is very hard to repeat. It's very high risk because you've got all your eggs in one basket. If you put your whole £100, your whole deposit into one company, you're reliant on that. And you've seen it with companies like Wirecard most recently. It completely crashed because they found out for fraud or some sort of hiccup. This can equally happen with Tesla. A lot of people are saying it's a bubble. I personally am not investing in it because I just think it's way too overvalued. But investing in a one company that has a lot of growth potential does have a lot of reward with it as well. But it's very hard to, and almost impossible to know the future and which ones are going to perform as well as this one. So another one that's done well is Nikola. So Nikola Corporation's here. So that's another company that's absolutely skyrocketed this year. So again, 300% in the last 3 months. So if you do have a one-off payment and you are looking for high reward and you can afford to lose it, it could be worth putting your money into one company. There definitely has been loads of examples of where it has performed phenomenally, but just be careful and be conscious that it doesn't always work out. So this does lead me on to my next point. If you are new to investing, don't expect your money to double overnight. It won't make you rich instantly, and you need to look at it as a more risky savings account. You shouldn't invest money that you'll need in the near future. A good discipline to have before you invest is to make sure you have some sort of cash emergency fund put aside before you invest any money in the stock market, so that you can cover any emergencies or any unexpected bills that come up in the short term. So you need to think of, before you invest, you need to think of what else could I spend my money on, what could I use it for. So at the moment, if you're looking to grow your money, there's not many viable options out there. So that in historic years, interest rates could have been 5 to 10%, which would a healthy return to holders' cash for no risk at all. However, now interest rates have gone down to as low as around 0.2%, some 0.001 or 0.005, some crazy low numbers which absolutely get slaughtered by inflation and is not worth doing if you're looking to grow your money. So even if you have a limited access savings account where you can't withdraw your money anyway for a certain amount of time, for a few years maybe at some points, that only goes up to even 0.5% or 0.7%. So, and you can't access that money for a year or for years in some cases. So if you invest in the stock market, you should appreciate that you won't get any sort of returns elsewhere that could match it in the current climate. But you should also use that vision and realise that the stock market should be used as a limited access account as well. So once you put your money in there, you should see it for the long term and appreciate that you can't touch it. Obviously, if you do see your money shoot up, if you do get like a 400% return such as Tesla, you might think about cashing it out. But for most value investors and in it for the long term, it's worth not touching the money and and appreciating the compounding growth. As I mentioned earlier, definitely will check out the other video to see how powerful the compounding effect is when investing. So even if you're not getting crazy returns in growth, with interest rates being only literally 0%, you're going to pretty much guarantee there are companies out there that religiously pay dividends of around 3% a year anyway. So you'll be getting that payment of 3% a year, as well as potential for the stock price to increase as well. So do bear that in mind before you want to hold in cash. There are a lot of, for me personally, I believe there's a lot of better viable options out there than holding cash in a savings account. So if I was starting up investing right now, personally, I would probably try and build my own portfolio, because for me, that's where a lot of the fun is. I like researching companies. I like the feeling of picking a company that does well and pays good dividends. But I would do it with a long-term approach. I would be conscious my money will take time to grow. I would also go with the intention of depositing more as and when I can, to constantly put more money into the portfolio to feed that compounding effect. However, I think the smartest thing to do is put your money into an ETF where it's a ready-made diversified portfolio, as this saves you a lot of time researching and also just buying the several different stocks and having loads of different companies like this. It's good to have one unit where you can easily manage and check on its price. But obviously that's down to you, your personal opinion. Finally, if this £100 to you is really kind of just throwaway money, you are just looking for some big returns, you just want to have some fun, have a brag if it does really well and not really bothered if you lose it, I think I would invest in some sort of cryptocurrency. I currently have around 3% of my portfolio in crypto, just because, to be honest, I have fear of missing out. I don't want to miss out on some of the returns that crypto has seen previously, and my gut feeling is saying there could definitely be some massive gains in crypto in the coming years, and I would be gutted if I missed out again, especially when you see even nowadays altcoins gaining like 2,000-3,000% still. So that's just my opinion. Obviously none of this video is financial advice, but these are some things that how I would spend my first £100 in the stock market, or if I'm thinking of a new deposit and putting more money in, these are some ideas of where you could invest it. So that kind of sums up my video. Let me know how you would invest £100 if you had it right now, or more or less. And also, if you're just starting your investment journey, please let me know if you want any tips or tricks or anything for Trading 212, or how to use the platform or anything. So thanks for watching, and I'll catch you guys next time.